We may have just hit the top of the gold market, and there's only two places for gold to go from here if that's the case. Number one, stay where it is in price, or two, go down in price. We'll discuss both possibilities in this video and why I think we may have just seen peak gold price as we explore. I know it's hard to believe, especially with all the analysts adjusting their predictions for gold to reach $3,000 or $3,100 or $3,200 an ounce in 2025. I made a prediction that gold would reach $2,900 before the year ended. We've already reached that point, and there is a good possibility that this may be the very top of the market, and we may see gold prices subside a bit or stay right around this area through the end of the year. I'm going to give you some reasons why based on some research that I've done. Now, this research that I've done and this synopsis, well, it's just my educated guess. It does not necessarily mean that this is going to be the case, because there's so many different dynamics and drivers that have really pushed gold up lately. It's really hard to imagine it not slowing down or subsiding a bit in price. But I'm going to throw that possibility out there, and not necessarily for you to time your buys based off of what I say about whether gold market is going to go, because again, this is just a guess. But I always like to put all the different options and ideas out there. I always also like to be a little bit contrarian as well, because hype can sometimes get in the way, and we have these unrealistic expectations for precious metals. And we should be as realistic as possible, because in the end, what do precious metals do? They preserve our wealth over the long course of time. And so whenever there's dips in the market, well, that's probably the best time to buy, as you never know, especially a radical dip. Usually there's a consolidation period. And when you're shopping around for precious metals during those times, or during times of dollar cost averaging, however and whenever you buy, I hope you will consider Summit Metals as a place to look at to compare prices and selection of products. Summit Metals, one of the fastest growing bullion companies on the planet right now. Elevate your wealth with Summit Metals. So what's the first thing that we need to look at to understand why this could be the top of the gold market? Number one, it's the New York gold demand. It is easing right now, folks. We're seeing some signs of it pulling back with this demand coming into New York. Gold EFPs, which are exchanges for futures of physical COMEX gold, they have narrowed by 45 cents an ounce, which doesn't seem like a lot, but indeed that is a number that we're looking at here. And this is pointing to some easing in demand after tariffs on U.S. major trading partners were less aggressive than feared. The exchange for physical premium was the highest at $34.80 an ounce back on January the 15th, in the week leading up to Trump's inauguration, as traders rushed to stock up on gold inventories in New York in the COMEX warehouses and in anticipation of tariffs on gold imports. The dislocation was likely exacerbated by the unwinding of short gold positions, driving the April futures prices significantly higher against spot gold prices. Yeah. So gold inventories in London remain tight, though, as traders seek to secure sufficient gold to fulfill their delivery commitments, which essentially is the short coverings to the United States. It had resulted in the ease of 1 month gold lease rates in London. And so that drop there is another side in the occurrence of backwardation in the gold over-the-counter forward curve, when it usually is in contango, which is forward prices higher than spot prices due to the higher costs from storage and financing fees, indicating strong immediate demand where buyers were willing to pay a premium to get gold now instead of later. At the time of posting of this article, gold withdrawals from the Bank of England require weeks-long waits, which had resulted in discounts of more than $5 an ounce for gold stored at the Bank of England compared to the spot price of gold on the broader London market, such as the LBMA over-the-counter market, according to sources from Bloomberg. This is an unusually large price difference between the gold at the Bank of England and gold traded in the rest of London's gold market, lends to the price to be very similarly, suggesting a decline in demand for Bank of England gold due to the long wait compared to gold in more accessible commercial vaults in London. So according to a Financial Times report, and many people have referenced, the long wait to withdraw gold from the Bank of England points to an increased risk of defaulting on the April 25th gold contract because so much has been shipped to New York. But now that is settled down a bit. This growing imbalance underscores the strain on the gold supply chain as increased demand from U.S. traders continues to drive up exchange for physicals, lease rates, and backwardation in the market. If logistical constraints persist, further pressure on gold liquidity could exacerbate market dislocations, potentially leading to increased volatility in gold pricing and heightened counterparty risk for futures deliveries. And that is the thing. That's the caveat here, folks. This could heat up again and be a big problem, or there could be a panic with even longer delays. Even if the demand is subsiding somewhat, it doesn't mean it's stopped. And so that is the caveat to that angle. But there's another thing. Newsweek is reporting that Russian gold reserves has fallen sharply at the end of last year, partly caused by the country's record high interest rate imposed by the country's central bank to cool the economy. Citing data from Russia's central bank, business outlet RBC said that during 2024, gold reserves had fallen by nearly half. That's 46.4% over 33 metric tons. Where's that gold going? It's coming out of Russia. And that is essentially going to dilute the market, and that is going to be, especially if it continues, and I think it very well could, if there is no deal reached, and it sounds like they may have to be at the beginning of a deal to reach the Russia-Ukraine war, because the Russian economy is hurting. The slump in gold reserves comes amid record-breaking prices for gold. Russians are piling up on what is considered a safe haven asset in response to high inflation, which is probably where some of that gold is coming out of the Reserve Bank of Russia into the Russian people's hands. And this is in response to high inflation and strict sanctions eating into the value of the Russian currency, which is the ruble. Now, if you wonder here about this report from Newsweek, well, I did check, and there's another source. Yes, the Moscow Times discussed this as well in a breaking news story. Physical gold reserves in Russian banks at the end of 2024 sharply decreased to about 38 tons, or half as much as it was in autumn of 2023. As of January 1, 2025, the volume of gold held in commercial banks stood at its lowest level since July of 2022. According to the Russian Central Bank, precious metals account balances decreased by 23.6% in 2024 in monetary terms, while dropping by 46%, or more than 33 tons in physical terms. The last time such a sharp decline in gold reserves was seen during the COVID-19 pandemic, when the volume of gold held by Russian banks had declined by 34.5 tons. While the specific banks operating with physical gold have not been disclosed since 2022, the leading banks with such operations up until February of 2022 were Sberbank, Gazprombank, and a couple of other Russian banks. RBC, that's the Central Bank of Russia, noted that major banks deal in physical gold in the interest of clients like gold producers and refineries, accounting for it on their balance sheets before selling it to contractors of such companies, including abroad. However, market participants surveyed by RBC suggest that banks' operations with gold producers have actually increased. So, yes, very interesting indeed. And, of course, it makes you wonder about all of those silver reserves that there has been talk about that Russia might be getting. Is that just fake news, or is that going to happen? I don't know. We've not heard much of it. And, of course, I've found no substantiation that the actual central bank of Russia is accumulating silver as part of its reserves. Now, for strategic reserves, for military applications, that would not be a central bank holding that as a reserve. It's a strategic, very different use pattern for that silver. But under the all-time high interest rates set by the Central Bank of Russia and the high gold prices, it's more profitable for both banks and their clients to turn the metal over as fast as possible to not keep it on the bank's balances, which actually led to lower gold holdings at the end of the year. So all that gold being shipped out, that I think in a way, even though it's mostly in the Russian market is my guess, that is probably not good for gold prices remaining bullish. So if this is true, and if this holds and sustains, and Russia continues to sell gold, and the New York demand for gold because of tariffs does ease, we know what's coming with tariffs now with the aluminum and steel, but gold is not a part of that. Silver is not mentioned as being a part of that, which means that the prices may stabilize, stay where they're at, or maybe even go down. Many people feel, in some cases, that gold has been on such a tear over the past couple of years here that, well, at least 18, 20 months, or at least, I would say over a year for gold. Gold has really been done very, very well, outperforming the S&P and many other things. It's really acted more like a really good investment than anything else as of late. But in all reality, it's a hedge against inflation, and it's a store of value. So could it be overvalued? I don't know. But my thinking is we may see it either, if it's not completely peaked yet, it may close to have peaked, and unless there's a lot more demand, or another central bank starts to add a whole bunch more gold, and we can track it, then more than likely the prices will stabilize and or go down somewhat. We'll see how it plays out. That's just a thought that I had. Let me know what your thinking is on where gold could be and could go. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.